Hello everybody. So this is an SDL Auctions Facebook Live working with Agents Here to Help. So I hope that some of you have been able to join us. The Agents Here to Help community was really, you know, a brilliant idea of Christian and a number of other estate agents to come together and start to share information for their communities and help people learn more about the industry that we're in, what we do, the sort of issues that you may have during being locked down, or the stresses on the property industry at large. And one of the things that I've spoke about already is auctions and how that can work for you, but also just to understand how we can start to look at the way we finance things as well, through that process, and understand the topic of mortgages, because I think there's a lot of different ways that people think about mortgages, and some people don't like to say they don't understand some of the terminology, and so I thought I'd be really kind of a bit of a mortgages 101 to say, you know what, this is a really good way to sort of learn how. I'm just checking that we can all see each other, sorry, don't bear with me. That we can learn about some of that terminology. So if you know loads about mortgages, then probably this isn't the chat for you, or know how to the details of how to finance property, whether you're buying auction or a private treaty. But essentially, I'm going to kind of give you a bit of a whistle-stop world of mortgages in relation to auctions and into private treaty. The first thing to say is I'm not here to give you mortgage advice or anything like that. It's to really just share and educate our community about auctions and how you buy and sell property, and obviously mortgages are a big part of that. Financing your property. You can, as a seller, you need to consider that your property is mortgageable. As a buyer, you need to be able to know you can fund that purchase. If you haven't got, you know, in auctions, you know that you often have people who will pay a 10% deposit and then they only have 28 days to then find the remaining 90%. And if not, if you've exchanged contracts, you're in breach of contract. So it's really, really important that people don't fall foul to those expectations. So essentially a mortgage is just a big fat loan that is secured against a property or land. And often is, you know, compared to a normal loan that you might have off a bank, is much longer. It's normally, you know, over 25 years in lots of cases. So, and there are a number of different ways that you can look at funding a property. In a traditional auction environment, often there isn't long enough for you to get what we call a traditional mortgage from a lender or a high street lender or something like that, because you've exchanged contracts really quickly on the fall of the hammer, and then you only have 28 days, which is 20 working days. So again, it's really tight in some cases because it's a really heavily regulated environment to get lending, and that's a good thing. And we'll talk about that a little bit more. So a big part of that is considering how you buy that property. If you're buying at a conditional auction, you can get a normal mortgage, you know, from a normal lender, but you do have to be aware that even then you may only have 56 days. So you should do your due diligence first. You should, if appropriate, get a survey done if you can, or at least get an agreement in principle from your lender that you're looking to loan from, or at the very least make sure that you can afford those repayments and the property is mortgageable. That's a big thing in auctions, because sometimes we are selling properties and the reason they go down an auction route is because they couldn't achieve normal mortgage lending. That might be for loads of reasons. It might be because, you know, it's, I don't know, a non-modern method of construction, or it could be because it's under a tin mine. I mean, there's honestly so many reasons that could be the case. Or if it had complex planning issues or any of those sorts of things. Even Japanese knotweed can be an issue for mortgaging. So it's all of those things to consider while buying. And essentially there's a few ways in which a mortgage works. You have lenders that you could go direct to and get a direct mortgage. And the thing is, again, this is my personal view of the world, all right? You can go direct, and if you've banked with somebody a long time, and you might get a great interest rate, and that's what we talk about when we talk about mortgages, or what's the interest rate. But if you go to a mortgage broker, they will typically have the whole market to attract other lenders, other products, other choices, and other types of mortgages that your one direct lender that you might want to go to doesn't have. So I would always urge somebody to go to a broker to get that advice. And mortgage brokers work in a number of different ways. So for example, within the SDL group, we have a mortgage network called Stonebridge. And within Stonebridge, there are 600 or more than 600 mortgage and protection advisors who work within that network. And the network of Stonebridge gives them a load of help about how they run their business, but really importantly, how they run it compliantly and how they offer the right products for you as an individual. The important thing to mention here is that because of what happened in the past with the credit crunch, and some people do or don't know, and I'm not going to talk about that in any detail, other than on the back of the credit crunch came a load of regulations that really, for me, it's brilliant news, because it means that you really should know that if you go to a mortgage broker, you will have really great protected advice, and they have to, tick so many boxes through the Financial Conduct Authority to be able to give you that advice, and there are really tight regulations about how they do that. So the important thing to remember is that mortgage broker is regulated to give you that advice, and within a network like we have within Stonebridge, again, it's that sort of level of protection. And often a broker will be what we call whole of market, which means that they're not tied to one particular lender, so that they can give you full product advice. And again, if anything that you have that's slightly quirky about your circumstances or anything like that, a mortgage broker can drill down and know the lenders who will be suitable for you. So again, that's the role of the broker in this. And even if you know that you've got a great product with your bank or whatever, somebody that you've seen advertised, it's really worth going to a local broker to you. Like we have in Stonebridge, a load of them work with estate agents as well. So it might be that they, are affiliated with the estate agent, or your estate agent can give you advice on who to go to. Some brokers will charge a fee to arrange that advice. And again, people do often think, oh, why do I have to pay a fee? With some brokers, you think about the work they put into finding you the right product. It's worth it, because a few £100 that you may pay for a broker fee is nothing compared to what you could potentially save over a long period of a loan. So it's really important to look at all of the things that you need to consider while looking at a broker and at your mortgage choice. Now that's assuming you know what you want, and if you don't, that's the joy actually, is that there is a lot of people that can help you. Your estate agents will be able to help you and signpost you the right way, and if not, you'll be able to find a local broker that will be able to do that for you. It's in lots of regards, it's always good to know it's secured against your property on that mortgage, for most scenarios. And that's the thing that says, it's the biggest purchase and the biggest loan you're potentially ever going to have. So do your homework on it. It's really important. And certainly if you're buying at auction, it's even more important, because you don't have the time scales that you would have in a normal private treaty process. So lenders who you can work with directly or will use a broker, they have all sorts of different sets of criteria. So they will be able to, one certain lender will say they've got a certain fixed rate product for a certain amount of period of time, and if you tick a number of boxes, you may be able to be suitable for that product. And again, that's why a broker's really great, because you may apply for that mortgage because that's the one you want, but if you don't fit that certain criteria, they can find you another appropriate loan. And again, there are a few different types of loans that you can have within a mortgage. And some of the terminology, again, we assume, because I've worked in this industry for years, that, you know, everybody knows what an LTV is, you know, and actually I'm not going to assume you know what an LTV is, because on the premise of Agents Here to Help, we're not going to assume that anybody knows anything. So an LTV stands for loan to value, and that essentially is that magic bit of how much of a deposit you have. You know, size matters when it comes to deposits in mortgages. It really does, because the larger your deposit, it means the lower loan to value you have. So for example, if you took out, I'm going to help my maths here, you took out a loan for, you wanted to buy a property for £100,000 and you had £10,000, that's a 10% deposit, so your loan to value would be 90%. And you'll have a certain amount of rates and certain lenders that you will lend at 90%. However, if you have £40,000 to put down as a deposit, and your loan to value then is only 60%, because you only need to borrow £60,000. Again, I've made the math simple for myself. I don't want to make it too tricky. So in that regard, when you have a lower loan to value, typically the best rates will be when you've got a 60% or lower loan to value, because you're a real safe bet and there's enough equity in that property, and that's the thing the lender's going to consider. So not only do they need to consider your ability to pay that mortgage back, and afford all of the repayments and make sure it's a sound investment, it's really important for them, dare I say, that they mitigate the risk that if you don't, there's enough money in that property for them to take it back, because it's secured, your loan is secured against that property. So that's the crucial bit. You may have heard, I'll come on to talk about the different types of interest rates and the way it's positioned. You may have heard of an interest-only mortgage, and that is essentially where you don't pay any of the capital. So the example of my £100,000 mortgage, the example of that is that I don't pay any of that £100,000 mortgage off, but I just pay the interest. And at the end of the mortgage term, I still have to pay that £100,000, but I've just paid the interest on it in the last 25 years, which obviously keeps the payments down, but it means that the property still needs to be paid off for you to own that property completely at the end of the mortgage term. And in an interest-only mortgage, now lenders are very, very strict on the fact that you have a formal repayment vehicle, essentially. So you have to have a way of paying that off at the end of your loan term. In years gone by, pre-credit crunch, where anybody could get a mortgage, and probably an interest-only mortgage, and the greatest test probably was, as I affectionately called, the mirror test, where you hold a mirror up and if it frosts over your breathing, in which case you can get a mortgage. That's not the case anymore. You know, we work in the position of responsible lending, and it's really important that anybody vulnerable or anybody is in a position to take out a mortgage does so with the clear understanding that they can afford it. And so interest only are not very popular now with lenders, but you can still have interest only mortgages. They're often used in buy-to-let mortgages as well, and you need to have a repayment vehicle, and there's a load of different things that you can do to do that, whether that's normally it's a combination of a life insurance and investment trust and things like that, but there's lots of those. That could be a whole hour's conversation about that. But normally mortgages are provided with an interest rate. You will have heard of an SVR, which is a standard variable rate, and your bank or building society or lender will have a standard variable rate, and they're really low at the moment, so because the Bank of England rate is very low. So and they're classed as repayment mortgages, so you pay a part of your interest and a part of the capital off of your mortgage. And there's lots of different product types, and again, I think even, myself years ago, before I learnt what I know now, I would have just stuck to the simple ones because I knew what a fixed rate mortgage was and I knew what a standard variable rate was, and anything else was a bit complicated. But that's the joy of having a broker in this conversation, because it's their job to explain that to you without judgment, without pushing you down one product or another, that says it might be more suitable for you to look at a capped mortgage rate or whatever, or a longer term fix, or there's so many different choices. There's terminology of, a tracker, so it might track the bank rate, or it might be a discounted rate, or there's so many different ways, but essentially there's an interest rate applied and you pay part of that loan off as well. And in earlier years you probably pay a bit more interest rate than you do pay on capital, but essentially that £100,000 starts to eke away, and then by the time you get to your end of your pretend 25-year term, you will have paid the interest, but you will have paid all the capital off as well. So the property is yours to do with what you will. And again, another thing that's coming into and in lots of people's minds at the moment is lifetime mortgages and equity release, where you may have a property with lots of equity but you don't have the income, and people can look to a broker to help them realise that income as well, because there are lots of different types of products. You can have there is self-build, there's guaranteed mortgages, there's sort of Islamic home finance, so there's so many different who can help answer those questions for you. And again, when you're looking at a buy-to-let, which is an interesting one with regard to auctions, because lots of investors will buy at an auction. And there will often be mortgaged as well. And when you consider a mortgage in a buy-to-let environment, part of it is if you're what we call a consumer buy-to-let, it's a regulated mortgage, and if not, it's an unregulated mortgage. So if you're a property investor or a landlord that is buying a property to let it out, then it's an unregulated product, and I certainly would advise you to get broker advice on those type of purchases. And what will happen there is that you have basically a rate that says you need to make sure that the rent is more than the mortgage, and normally it needs to be around about 145% typically. There are people that do it lower and whatever, but so if essentially your mortgage repayment was £1,000, then your rent would need to be $1,450 for that to get a mortgage, essentially, for somebody to lend against it. And that would say that's a sensible investment and a sensible risk for the lender. So there's a few people in that, in that mix that can come and support you in that. The people that I position that as you're in your team, if you like, when you're buying or selling a house. You've got an estate agent or an auction house in our cases, or we work with estate agents in lots of cases. Then you might have your broker, your mortgage broker within that. You then will have a conveyancer involved in that somewhere as well. And that's where working really closely with your broker and your estate agent really helps, because you can't do any of that without conveyancing. And then you have a surveyor as well. And typically the surveyor works for the lender. So I'll come on to the conveyancing in a minute. So we've got a core team of, I've got my estate agent, I've got my mortgage broker or my finance in place, and I've got my own, house sorted out, and I know what I can afford, and I've got my deposit, and I've got everything ready, and I've, and I also know about those other fees involved. So I know about my stamp duty, I know about my moving costs, I know about my solicitors or estate agency fees or anything like that. And so within that, your lender will approach a surveying firm to do a valuation for them. And lots of people will have an independent valuation as well for their mortgage, but essentially the survey that the lender instructs, it's an important point here, it's not for you. you might have to pay for it in lots of cases, and some lenders don't. Some lenders, you get free application and a free survey, and some you pay for it. It really, again, it's talk to your broker about the weighing up those costs. But the surveyor works for the lender, and so the surveyor will go out and assess the valuation of the property. It certainly will, on a mortgage valuation, tell you some of the key issues with it, but fundamentally it's to tell the lender that it's worth the money you're prepared to pay for it. So that it gives them some security that the risk they're taking is a safe one, really. And it's a safe one for you too. So you're not borrowing money on a property you think might be worth £200,000, but a surveyor says, well, listen, compared to what's the comparable evidence and the assessment I've made on the property, it's only worth 170. And that's when you may hear something that we call in the estate agency industry, or a surveyor has downvalued a property. So that's where that comes into it. And again, we would always encourage, if you're not sure about the property you're buying, to get a bigger survey done. So get a home buyer's survey if it's appropriate, or a building survey, because that will tell you specifically what those issues are with the property within the constraints of that survey. So again, get a specialist to check that out. And often your mortgage broker will be able to put you in touch with one as well. And once that surveyor has gone back and said, Mr. Lender, it's good, it stacks up, and they may do that if it's a buy-to-let. They say all the rentable values are about this, so we're about on point, and off we go. And then a lender will give you an offer. Now, we've skipped a big bit there, but that's specifically what your surveyor's role is on that. Your conveyancers in that are also charged with making sure all the search documentation is correct, that your title deeds are through, and you're buying the house off the person who actually owns the house, and all of those technical things that we just take for granted in our world. So that's why it's really important to get a team of people to support you. And anybody that buys more than once every 10 years, which actually most of us only do it, quite rarely actually. But if you are doing it from an investment point of view, and certainly if in an auctions environment, it's important to have that team of people in place that says, look, I'm good to go. I've got my finances in order. So the thing to remember is, that the days of where, the mirror test, and you told people and they said, oh, you'll be able to lend 4 times your salary, whatever that is, that's not the case anymore. And mortgages are now put together on the basis of your affordability. So your personal finances are really important, and your outgoings are really important. And it's really for you to have as much choice in the marketplace to get your ducks in a row and make sure that you are as lendable as possible. And there's loads of things you can do. And again, if you have anything a little suspect in your credit rating or your history or anything, a broker is where they can step in, because they will know the idiosyncrasies of different lenders and what their criteria is for lending, and that's where that's such a skill, because they know those underwriting processes that the lenders will go through will say, actually that lender will make sure that you need to pay off your Tesco's loan, and that one will only, will need you to evidence it this way, and all of those special things that you or I would never know. So it's really important to sort of talk to a broker, even if it's just to give you confidence on the loan you're going to get. Some people don't necessarily go through a formal mortgage broking process. They might bridge if they're buying at auctions and things like that. But again, they're for potentially more experienced buyers and investors in that place. And I wanted to position this today as a bit of a basics of that world in buying and selling houses, with a slight focus on auctions, but knowing it's relevant to most scenarios. And again, I think for me, the more I know about the industry and the way it is regulated, it gives me faith and trust in the people, because you know what, there is a recourse. They have to be formally trained. They have to evidence that they're doing the right things for you, and be really clear about your ability to afford that loan, because that there is a huge impetus to make sure that we do not overextend people's ability to loan and look after their finances, because nobody would want to encourage that, especially in some more uncertain times, even more important than normal. So please, if there's any questions, drop us a line. You can drop us a question on Facebook or go onto the website at SDL Auctions, and lots of questions and answers are there. Or if you're a mortgage broker and want to know more about Stonebridge, you can look up Stonebridge Network with the SDL group as well. And for me, it's more around just opening your eyes to the world out there, and not assuming that, even for us in the industry, that people who don't often buy a house, it's a big event, that we don't assume that people know more than they do, and it's our job to be the experts and help answer those questions. I think when it comes down to thinking about your finance, it's all about risk, and there will be some people will look and go, God, if only I bought 5 houses 20 years ago, look what position I would be in. But even that 20 years ago, whatever that property was worth then, somebody was prepared to take a risk, take a loan with that security that says, if you're buying a buy-to-let, what happens if I have a tenant who can't pay? What happens to the capital value if I spend too much money on doing that property up? I might buy a rundown property for £200,000 and spend £100,000 on it, but actually, with the best will in the world, it was only ever going to meet the valuation of £250,000. In which case, I've got to keep hold of that property for longer, or think about how I invest sensibly in that. So there's no hard and fast rules on this. And I'm sure, lots of us have, watched Homes Under the Hammer. Andy and a lot of my colleagues are on it all the time. And there are real brilliant examples when buying at auction, considering the financing and the capital investment that you can make and the returns on rent. It's fantastic. But again, you have to be aware of where the money's coming from, what happens, if we're stressed financially, and lenders do stress tests, on your finances. You may be able to afford a mortgage today with today's interest rates where they are, because they're really nice and low. But what happens if inflation changes or the bank rate rises, and all of those sorts of things that can impact? And that's where, if you can make those risks, that's the people who've got large property portfolios today have made those risks, but they're not easy risks to make, and you have to be in the position to do that and do your homework first. So I hope that's been of help. Again, as I say, we are, as a community with agents here to help, trying to answer some questions that people may have, and sometimes we don't know what those questions are because we may assume. So all I'd say is just ask the questions, and there are no daft questions. And at some point I've asked them, all of us have. So just be open-minded to it, and know that it's all about getting a great team in place. And I hope we can be part of your team. Okay. Anyway, thank you for listening, and I look forward to catching up with you all again soon. Okay. Take care. Thanks. Bye.